I've been looking forward to this. I want to talk silver. It's right in our wheelhouse, one of our core positions. And I couldn't help but look forward to having a chat with David Morgan about that. I call him the silver guru. Why? Because he's got a level of expertise rarely matched when you talk to analysts about the silver metal. David, thanks for finding time for us. Much appreciated.
Michael, it's been too long, and thank you for having me.
Well, let's start. I know it's a broad question, but I'm looking at silver on Friday, for example. I guess we peaked at this number at about October last year, but before that, I think we're going back a lot of years since silver's been, tickling these kind of numbers. And as a Canadian, remember, we get the devalued dollar side of it too. So it's been terrific.
Well, silver's finally caught a bid. I mean, gold's been making new nominal highs for quite some time, as you well know. And silver, really, if it were making nominal new highs in U.S. dollar terms, it'd be about 50, and it's not. Gold and silver both went up about 30% last year. And silver's edging out gold so far this year, and we're about a month and a half in. I do think that silver will do what it's done in the past, which means it will accelerate as we get to the top of this secular bull market in the metals. And I think we really have got a lot longer to go, Michael. I think we're probably a couple, 3 years out. But, as I've always said, the market knows more than anyone. So we'll have to wait and see.
Uh, and looking, and of course, I was around and you were around when we had the Hunt brothers enjoying on this, but that was a fun time. What was that, about $55 US was the high at that point?
Yeah, I don't know. I don't want to lie. I think the exact price was like 52.50 on the spot
Okay.
market, and the near futures was above 50.
Well, that gives me a ceiling at this point. But we've, as I say, you've had a lot of technical signals recently that are very positive, for silver. Uh, can you tell us what you think is moving it? Is it just a relationship with gold? Because of course, another new high this week in gold. Is it that relationship, or amongst other things?
It's a couple things. One is it's gold. I think that's the primary mover. Gold's, doing well, and there's been, unceasing central bank buying gold. Central banks have been buying gold since the financial crisis of 2008, pretty much from 2011 onward. And this really accelerated the last few years. And it's very apparent in my thinking, at least, for the reason, and that is simply that when the Ukraine war broke out, the United States made, I think, one of the biggest financial blunders in the last 50 or century, which means that they sterilized $300 billion of Russian assets, US treasuries, took them, basically stole them, and gave them to the enemy of Russia, Ukraine. And once the rest of the world woke up and saw that, they said, what if I'm not politically correct? Will the
Hmm.
United States do that to our bank account? Again, a huge blunder. And because of that fact, a lot of these countries that probably weren't thinking gold started to buy it, and countries that were buying it started to buy more because it is the money of last resort and it has no counterparty risk. And all central banks look at it as a tier one asset. So, having said that, silver usually moves with gold. It's about 85% correlation. And then, if you want to get into the tariff thing and the arbitrage between London and New York, while this metal's moving out of London into New York, we can discuss that as well.
Well, and again, that central bank buying, and I think I love that people hear what you've said there in terms of, keep in mind, you're talking, well, both to an American Canadian audience, but on the Canadian side, they saw the confiscation of bank accounts, during the convoy. People who had not committed any crime whatsoever, were not accused of committing a crime, and had no recourse. And there was their money confiscated or frozen in the bank, I should call that. And as you said, Alla, what was happening to Russian assets, and not a surprise that people started to look for alternatives. That and you look at the central bank buying of gold, and it's just consistent and huge.
Yeah. Yeah, there's no getting around it. I mean, what happened in Canada, I made a kind of a big deal out of it. It was common sense, but a lot of people think, well, if we're on a central bank digital currency, then they have control over our money. No, they didn't need any CBDC to freeze those bank
Yes.
accounts from the truckee strike. Really, really hit a nerve with me. I'm American, but 40% of my business is Canadians, and I'm there a lot, as you well know, and it just really, really hit me hard, Michael. But a lot of this stuff has in the last many years, as you know.
Let me ask about. Well, okay, so silver is there. I mean, the other kicker I've always liked for silver, and why I was so comfortable, I said, recommend it to everyone. Have a core position. when it moves, it will be the old Ernest Hemingway thing. How did you go bankrupt slowly and then, then all of a sudden? And I see that style of movement as different things get discovered, all of a sudden in the marketplace. But one of the kickers I've always liked is the industrial use, especially with electrification going on around the world, and there's huge swaths of people who even don't have any access to electricity. So, I mean, I see that big play too coming on board.
Yeah, it's been huge, Michael. I'm trying to be succinct, but if you go back 25 years, 35% of the silver market was industrial use. Today, 60% or more is industrial use.
Hmm.
The other thing is, in 25 years ago, the mining activity worldwide was 550 million ounces per year. Now we're at about 850 million ounces per year. So if you do the math, not only has it gone up from 35 to 60%, we've increased the mining activity by 300 million ounces. So if you take that math and you just do some simple in your mind, 550 million ounces is about what the silver market uses right now on an annual basis. And that was the absolute total 100% silver market 25 years ago. So if we go back 25 years and the mining was flat, it's not. I just said it went up 300 million ounces in 25 years. So if we're flat, it would be 100% of the market was devoted to industrial use. So I just want to make that point very clear to people. Hope you understood the math. It's pretty simple, but this is the amount that's used in industrial. People say, well, industrial doesn't count. It does count, but it's always the margin. And the margin is the volatility in silver due to investment demand, which is basically the risk on, risk off. Oh, dollar's good, dollar's bad. Stock market's going to save us. Real estate's the way to be. On and on it goes. And then when people get really scared, they go to safe havens, usually gold first, and then the silver.
Can I ask you to describe, let's say I have three choices. I can buy silver bullion, I can buy a silver ETF, exchange traded fund, or I can buy a silver stock. Can you review the ETF for me? I mean, I'm starting to read reports that, I mean, it's supposed to be, if I buy an ETF, they're supposed to have the silver backing it. I can come and get it. But I've heard reports, there's some doubts about that to the degree to which they have it actual silver bullion backing.
Yeah, it takes a pretty good forensic type of accounting to look into it pretty deeply. If you study the prospectus like a lawyer would, they use the word silver price. They do not actually tell you
Mm.
it does anything other than follow the derivatives price. Remember, the silver market is a derivatives market. When we talk
No.
silver market, we're really talking about 1,000-ounce commercial bars that are represented by pieces of paper. The retail market that we're most familiar with is a subset of the silver market, but it's really a separate market. So going back to the ETFs, there's a couple things that bother me about it. One is it follows the silver price. Secondly, the if you have the medallion, which is just the receipt for a
Yes.
contract, you could count that as if it's physical. Now it should count if you paid for one contract, roughly 5,000 ounce silver, and you own it. Then obviously you have a receipt and a warehouse receipt, a claim on that silver. However, let's say that silver is sitting in a warehouse in New York or a vault in New York, but you also put it on the books of your ETF. Now you're double counting. You're
Mm.
showing silver in your bank vault and you're also showing it in your ETF. I think that goes on more than people like to think about. Secondly, to extract silver out of the SLV or the PSLV or some of these other ETFs is extremely cumbersome and it's not available for anybody other than the bullion banks, really. You have to be really well heeled in order to have the privilege of taking physical metal out of the paper entity. So I would say bullion first, something you can touch. I would say mining stocks is a second because of the leverage. And lastly, I would use ETFs. And I'm not opposed to any of those. People ask me all the time, well, do you recommend them? I say I recommend what works for the person, but I always recommend starting with physical metal first. After that's accomplished, if you want to move into other areas, certainly you could.
So here we have silver, Ala, what you're saying, trading back to, as I say, the October high, but that's been the high for years. Have the silver stocks, and I know there's categories, there's seniors, there's mid, and there's juniors. Let's say even have the silver seniors even kept pace in a way, reflected that nice strong move.
This was not rehearsed, folks. A lot of my friends are dealers, and I know them quite well. I know many of the dealers in Canada and the United States, and even in Europe. the point is that almost all of them will tell you, and they'll tell you this, that you're much better off buying physical metal than buying the mining shares. On aggregate, that's true. If you average the mining shares and take the total and divide it by the number of shares or companies, you're going to come out and the gold and silver usually outperform. However, if you're subscribed to the Morgan Report, you'll find out you do far better if you're a stock picker. For example, if you bought silver Wheaton in 2011 at the top of the silver market in the US, roughly $50 the ounce, that stock price has doubled. Silver would have to be $100 in US prices in order to maintain the same gain that we had in the Morgan Report. If you look at Agnico Eagle, it's making new all-time highs as we speak, outperforming both metals in a substantive way. So if you looked at, and then when our top tier is geared that way, when I started the Morgan Report, Michael, I was, no offense to any Canadians, I love the junior markets. I know so many of you, but if you want to be safe and sound, you buy the blue chips. After you have a solid base in the blue chips, then you can move down the pyramid into the junior producers and the speculative sector. But you want blue chip stocks to build your portfolio. Had you done that with the Morgan Report, you would be far above buying the metal right now. Obviously, I advocate both, but if you could pick the stocks, you can definitely outperform.
And along those lines, and this is, sorry, I'm almost feeling like silly asking it in this way because it's too simplified. But what are you looking for? Even because you have a range of silver seniors that you could choose. How do you distinguish? Because the macro environment's the same, assuming they're not in a tough jurisdiction that might confiscate. But let's leave that for a side. What's the distinction that we should look for?
Yeah. Well, a few of those books back there are some pretty smart guys talking about how to analyze a gold stock, and I could probably take them all off my shelf and burn them. And the reason being is that we had a real shift in the precious metals industry across the board, but primarily in the precious metals industry, and that was with the advent of Samir Shulich and his compadre uh, Pierre Lassonde. And when we went into the royalty/streaming model, this beats everything by far. And that's what I focused on. I said, look, I'm in the business to make people money. And the commodity's pretty simple. If gold comes out of South Africa, Canada, or South America, I don't care. It's the end product. It's fungible. Once it's 999 fine, it's all the same product. So what I have to determine is who has the largest margin, who's got the least risk, and what are the profits going forward.
Mm-hmm.
And if you analyze a royalty company versus, let's say, a general miner, you see there's a lot less risk on inflation hazards. If you have royalties in, let's say, 5 jurisdictions, you have a lot less geopolitical risk, and on it goes. So we favored, and we kind of do this annually, Michael. We go through the philosophy, you might say, of why we like the royalties at streamers, and then we pick the best of the best there. And yet, having said all that, had you bought, Pan American when I did at $2.50 a share, my dividend's about 10% right now. And that stock has performed, quite well. It's had its ups and downs, and I've traded in that a couple times. Agnico, a similar situation. So there are some miners that do almost as well as the royalties. So we have a few of those as well, but it's a shift. There's no book back there that talks about, royalty companies right now because relatively new. I know, of course, we talked our age before the show started, but I have some seasoned professionalism in this business, as you all know.
And let's come to the other side, which you said, build your portfolio with quality, with the seniors, more predictability, as you say. And if you add on having a look at the royalty stream, you've reduced your risk further, from various factors. But saying that, you've also had a very good track record looking at juniors. And people have an interest. And what you're warning is make sure you know your risk and how much you're putting in, et cetera. But within all of that mentioned, what do you think of the junior market, or do you have a couple that you're keeping an eye on?
Well, I did have the hot hand. I've had it for almost a decade. Since then, I really haven't. But I do have a couple. We just put a new one in the report 2 months ago, or January, maybe a month ago. It's in South America, and it's really high grade. I really like grade. Grade is king. Yes, I know you can get disseminated, and and make a profit if you have enough of it. I know all the arguments, but nothing beats grade. So this is one that we put in the list. Really, if you want leverage, you're not going to get a Bitcoin type of performance. But before Bitcoin, the way you got those type of results were in the junior mining sector. I mean, that was the penny stocks dollars. I mean, that was a potential big market. And now, of course,
Mhm.
it still exists, but not to level. So right now, silver's undervalued relative to everything. Silver's undervalued relative to gold. The silver stocks have been beat up, even the majors, for the most part, a couple of exceptions. And the junior silvers are almost giveaway prices. So if you can pick stocks and you're willing to diversify, you can't just pick one. You might pick one and get lucky. But we have one that we like. We have another we're investigating. There's one up your way, and maybe I'll give a big enough hint because I don't mind giving out. I don't like giving my picks because I keep the list short. But in the Keno Hill property area, that's really a great, great project. It's near a bunch of majors, so if you most of you Canadians know a lot about mining. If you just look at Keno Hill area and a couple of mines that are near some majors, two of them, in fact, that are silver companies, giving some pretty big hints here. There's one there I really like. Haven't finished all the due diligence on it, Michael, but I know the people. I know the track record. They spend money judiciously, and they really know what the heck they're doing, and they have some really great grades. So there's two I really like, and I haven't. If you would have asked me on your show 2 months ago, I'd be kind of flat-footed right now. But right now, I'm glad you asked me when you did, and I have a couple that
Oh, good. I finally got some timing.
I really.
David, before I let you go, I want to ask you about a documentary that, I mean, I know you've written books. Of course, you've got the Morgan Report, but tell me just quickly about the documentary and how we might get access to it.
Well, one of my, like I said, mentors said, you're going to write another book. You haven't done anything. I don't sit on my butt, but, and I said, I'm tired of it. And so we started talking about making a documentary. So I've got it filmed and it goes to a lot of people that are not necessarily in the mining business, but in the money, hard money camp. I've got G. Edward Griffin, a creature from Jekyll Island, Foster Gamble that did Thrive
Yeah.
1 and Thrive 2, Edward Vieira, one of the scholars that wrote Pieces of Eight, Ron Paul, Ellen Brown that wrote Web of Debt, and many like that in the film. But I'll just read the synopsis really quickly. But we look at money basically from a spiritual aspect, and the name of the movie is Silver Sunrise, and it goes from looking at tribal trade to using gold and silver, from paper and debt to central bank digital currencies. And Silver Sunrise sheds light on the manipulation of money by governments, banking cartels, hell bent on exploiting civilization with endless debt, perpetual wars, and unjust enrichment. By better understanding the monetary system and how corrupt it has become, Silver Sunrise, this documentary enables one to postulate a new, brighter future, one without overwhelming stress, fear, and control associated with money. And having said that, we do a lot of looks at energy because really the world runs on energy, not on
Yeah.
money. The adage, money makes the world go round, it's partially true, but it's really energy that makes the world go round. And if we were able, as a thought experiment, to think that maybe Tesla could have brought free energy to the world, contemplate what the world might look like now if we didn't have to pay for energy. We had it in such abundance that we could desalinize water along the coastline anywhere there's an ocean and land that intersect, the amount of food we'd be able to grow and the amount of production we'd be able to entail. So I'm not saying that Tesla was doing that, but there's postulation that he was or trying to. So there's a lot to this movie, and I'm trying to get a deeper look, Michael, because my life's work is really revolved around freedom and free money or honest money, sound money, and freedom actually go hand in hand. And we're in a situation now where the technocrats are gearing us down, and even all that you may or may not like politically, the beat goes on from my perspective, which is AI and this intelligence that has been put as an overlay on government. They're going to remove a lot of the people in the government and use artificial intelligence to mandate a lot of these functions that government performs now, which actually means more control now.
So, Silver Sunrise?
SilverSunrise.tv, and there's several trailers you can watch for free. And if you're inclined, you want to make a donation and get in the marquee as we scroll through the credits, you're welcome to do that.
Looking forward to it. The Morgan Report. David Morgan, great to have a chance to visit. Thanks for taking the time.
My pleasure, Michael. Thank you.